A rough week for the banking industry.
The collapse of Silicon Valley Bank.
The second biggest bank collapse in U.S. history.
Well, I'm sure you're all aware, how could you not be, of the banking crisis sweeping the United States over the last week. It's been building a long time. It is a very serious problem in our economy, is not going to go away anytime soon, and its ramifications are going to be with us for months and years to come. So here is an effort to understand what happened, why it happened, and what it means. This is another crash of the private capitalist system in the United States. It's not just a crash of the banking system. It's not just a crash of the middle-level banks as opposed to the big mega banks in New York and so on. There are efforts to make it small. Don't be fooled. This is a breakdown in a basic part of the economy. The reason the president immediately got involved and major changes were made in the first weekend after the crisis hit was because the government understood, as it has to, that the risks here are economy-wide, I dare say global, and they had to act quickly, and their actions are quick actions, which will almost certainly need to be adjusted as the mistakes involved, the misunderstandings involved show up and have to be dealt with. So here is roughly what happened. Basically, the banks, the commercial banks in this country, take in deposits for which they pay very little and lend them out, make investments with those deposits, and hopefully make a good return on them, because then, using other people's money, namely the depositors, they can earn a profit for themselves. And that's what banks are in the business to do. Their job is not to manage the monetary system of this country upon which we depend. Their job is to make money for the investors in that bank. That's a very strange way to organize a system we all depend on, but that's what capitalism is. And the problem with the Silicon Valley Bank, the major bank that crashed, of the three that crashed pretty much at the same time, Signature Bank in New York, and one other financial institution. Here's what happened. Over 6 months, deposits out there in California, in Silicon Valley, shrank. They shrank because high tech is not delivering the kind of blockbuster returns that it once did. That's part of the reason why we have had, over the last 6 months, almost 500,000 workers in high tech, many of whom are in California, lost their jobs. And if you don't have a job and you don't have a big income, you don't make those deposits into your bank, often made by the employer for you. Deposits were shrinking. At the same time, one of the major investments that bank made, government bonds, were falling in value, because that's what government bonds do. When interest rates go up, their value goes down. So a bank was caught in what every bank knows is a really bad 1-2 punch. Fewer deposits coming in, and the value of your holdings, which in the end is what you have to give the money back to the depositors if they want it, this was not working right. That bank's leaders could have and should have understood the dangerous position they were in, made it clear to everybody involved, the little startups that depend on that bank out there, the people whose savings and whose liquidity is in the bank, the region, the government, all of them. They didn't. That's the problem. They didn't. Here's the second problem. The government regulatory apparatus, the commissions, the offices in the government whose job it is to regulate these banks, they were off their job too. You know, after the great crash of 2008 and 9, we went through a big procedure to make the reforms and the rules tighter, just like President Biden said in the aftermath of the collapse of Silicon Valley Bank. But here's what always happens. The reforms are agreed to. They're fought by the banking industry. As soon as the fight is over, if they've weakened the proposed regulations, they're happy, but they never stop. They continue to try to pick at them. The reforms adopted after the crash of 2008 and 9 were therefore relaxed under Trump. Did the Biden administration, when it came in, really deal with this problem? No. Republicans and Democrats are busy doing what they do in moments of crisis, blaming each other. It's useless. They're both responsible, either for not doing the regulations in the first place or for finally passing them in a weak form, and then for allowing the weak reform to be undone later through the activity of lobbyists and donations to the politicians. But we're going to see other things that ought to worry everybody. The most dynamic sector of the American capitalist system has been the high-tech sector. That's where we have been able to be at the forefront of production in the world. The only country elsewhere coming close to us now is the People's Republic of China. This is a catastrophe for high-tech startups. Their ability to raise money is going to be worsened. Their banking relationships are going to have to be redone. Anxieties about this, about the weakness of others involved with high tech. This is very bad news, not just for small startups, not just for Silicon Valley, but for the whole American economy that has been in many ways carried by the high tech sector, which here was damaged. That's one serious consequence. Second serious consequence, we have advertised to the world that among our largest banks, let's remember, Silicon Valley Bank is the second largest bank to collapse in American history. We're talking about a bank with tens of billions of dollars, a big deal everywhere in the world. It failed. It collapsed. It wasn't clear to the rest of the world that it was anywhere near collapse. So there are questions of secrecy, perhaps, or knowledge not being available. You know what that says to an investor everywhere else in the world? Don't hold all your money in the United States. Don't hold it all in the big American banks. Who knows how far this has gone or will go? Third implication, and the stock market is a reflection of this, everyone is wondering, where else in the American banking system are deposits shrinking? If we're heading into a recession, won't that mean a reduction in deposits as people lose jobs, as businesses cut back, the things that happen in recession? And if deposits are shrinking, my goodness, at the same time, banks own those government bonds who are going down in value as interest rates go up. But then, as we all see, interest rates, we are told by the Federal Reserve, must go up to stop the terrible inflation. But if they go up and they diminish the value of the bonds, that will make the banks weak because they own them in huge quantities. You see, we're stuck. You go in one direction to solve one problem, you worsen the other one. You reverse course, the vice versa happens to you. That's a sign of a system in trouble. Last point. The Federal Reserve has tried to control this disaster by simply opening up its window and saying to any bank, and indeed, I noticed they extended it to credit unions as well, you need money to satisfy your depositors, but you don't really have it, we'll give you the money. You can come and borrow the money, limitless, the word they used, limitless. Hello, friends, we have an inflation. And the last thing you want to hear in an inflationary environment is that the government's central bank is limitlessly making money available. We're not going to succeed in controlling inflation. That's another consequence of this banking disaster. Bottom line, if you understand the centrality of money, if you understand the wisdom of the phrase, money makes the world go around, you know that our economy, yours, mine, ours, is dependent on the monetary system. To allow private banks, whose first obligation is to make a profit, to be in charge of what could destabilize our monetary system, that's nuts. That's a capitalism that has proven unreliable. Failure of the company, failure of the government supposedly regulating them, all of us in danger. We must learn this lesson so we don't repeat these scenes again.